Good morning, traders and investors around the world. Welcome to Thursday's March Madness edition of Benzinga's pre-market info, brought to you by Options House. I'm not sure Joe is on yet. He may be filling out a few more brackets for the tournament.
I'm right here, Joel, but question. Are you going to say March Madness before every episode of pre-market prep in March?
No. You know when I'll stop?
When will you stop?
April 1st.
Yeah, when it's over.
It was not over to the first weekend.
And also, we've gone international apparently around the globe, huh?
Yeah, we do. We do have some listeners across the pond. But Joe, what do we have on the show for today?
Well, both of our guests today are actually here in the continental United States. As you'll know, it's Thursday, so it's Fari Tales. We're going to learn how to pay for that expensive Chicago soup with Fari Hamzei's stock picks for the week. We've also got Eagle Bay Capital founder JC is it Parets or Parets? I can never remember. I think it's Parets.
I think it's Parets.
Parets,
Yeah.
yeah, of who is Twitter handle at All Star Charts. He will be on the show 9 a.m. Eastern time.
So did we decide on a name for Fari for the Fari segment?
Fari Tales.
I used Fari Tales.
We're gonna use Fari Tales.
That was the best one. Who
Okay.
came up with that, Brent?
Brent, yeah.
No, I did.
I
Joe,
can't take
did-
credit.
you, Joe?
I think I like highlighted in the chat, but I feel like it was DJ or maybe even JH3.
Oh, somebody from the chat.
JH3.
Yeah, they totally get credit.
Really?
Yeah.
We'll give it to the chat. Good
Thank
job,
you.
chat.
And then
Bravo.
I think I can wrap it up. You'll be sorry if you didn't listen to Fari. How about
I
that?
don't like that.
What?
If you want to wrap it up with that, Joel, I think
Joel's
that would
already
Yeah,
be
see,
corny.
Brent's always
Fari Tales
sticking
is
up for
fun.
me.
That's his
Even though
fun.
I like keep moving everything on my desk over on his desk, he's still nice to me. And Jake is, he's in the middle. Kurt's too young, he's a youngster. He can't be mean to me. But it's just Joe. Chubbs is great. I mean, we got a great crew here.
Joel,
but,
everyone's young compared to you.
well, no, Fernando's in his 30s, isn't he?
Well, Fernando and Jason are both in their 30s, but that's still significantly younger than you are.
Okay.
I'm in my 30s too, Joel.
Yeah, maybe that would be a trivia question. But anyways, Dennis, what a wild day yesterday, huh?
Whoa, when that Yellen started talking, they started slamming bids. They were not liking what she was saying, obviously spooking the market. Brent, you got a little bit of the highlights there from yesterday, just for anybody who did miss the 2 to 3 o'clock show that was Janet Yellen?
Yeah, sure. So I mean, with the Fed head talking like this, I mean they are based on prepared statements for the first 20 minutes to a half hour. So nothing too surprising there. But when you do get into the Q&A, that's when you can kind of get some of your surprise comments. So Janet Yellen reiterating that fall of 2014 is likely when QE will end. Yellen saying that she sees a considerable period between the end of QE and the actual first rate rise. She said she was a little disappointed in the economic recovery recently. And I think it was like 13 out of the 16 FOMC members said that, let's see, the rate rise will be coming in 2015. Then there was 2 of the remaining 3 that said it's not coming till 2016. So a bit of dissent there.
Okay, Dennis, this is going to lead us to a fundamental discussion here.
Uh-oh.
Yeah,
Fundamentals?
Yeah,
Did we talk about fundamentals?
Yeah. I hope we don't lose too much. I think J-Dot will stick with us through this
We'll
one.
lose myself, maybe.
But we've talked about for a long time, the driver to this market has been low interest rates, has been the Fed. And we've kind of had a promise, you have to agree with this, that, as long as interest rates were low, there were very few alternatives for your investments, for money. And even though that maybe Joe Public didn't put all his money into the market, dividend stocks, better than anything you can get in bank. And now the Fed is telling us interest rates are going up. Maybe not in 6 months, 9 months, but within a year. But they're putting it out on the table, and that's why the market got spooked. Isn't this the potential top?
I don't know if I think it's a potential top here or not, so I'm not going to go out and call that. It's not good for the market. Obviously, that's why we sold off 15 or 20 points, because they never like to hear that interest rates could potentially go higher. But I mean, how high can they really raise the interest rates? Let's be honest here. We're still not. They start jacking up the rates like crazy, they'll put us right back into recession, and they know it. So maybe they get rid of the QE, but I just don't see them coming around and going like we did back in the day and start raising interest rates like crazy in the mid 2000s. Because everybody is too in debt.
So there
I
was
just don't see it happening.
there was a comment within the statement said, FOMC members see the median Fed funds rate at 1% by the end of 2015 and at 2.25% at the end of 2016.
So yeah, so two. Okay, so even in a worst case scenario, go up to 2.25. We're not talking like going back up to 4, 5, 6% here. I just don't see it ever getting back that high. If it goes up 1%, yeah, it's scary. I mean, you've got to be a cognizant of it, obviously. And if you want to watch interest rates, what I always watch, a nice vehicle to watch, is the 20-year ETF TLT. When you start seeing that thing get killed, which was actually happening, if you go to the chart of the TLT, Joel, when we were getting a little bit of the concerns with the QE, look at where this thing was just a year ago when it was trading up at 124, 122, and they murdered it. They murdered it, on obviously the rumors that QE was eventually going to end here. So a lot of that was already priced in. I mean, the QE ending, I think, has been priced in, a lot of it, to the market. I mean, a lot of people come out and say, oh, but when it actually ends, that's when it's going to really get ugly. But remember the market forecast, and she's pretty much put it on the table, saying it's going to end this fall. And I think a lot of it, surprisingly, might be priced in here, because when you look at this TLT, this thing got rocked from its highs back at 125, 130.
All right, so you believe in financial engineering then? You think that they'll be able to, just have the spigot going and going, and then just be able to, systematically, reduce the amount of funds going into the system, and just bring up interest rates just at the right rate, so it won't bother this
I just
slowly
don't
growing
think that they'll be
economy.
able to raise. I don't think that they're going to raise interest rates enough to cripple the economy and send us back into a recession. I don't see that happening. Is this good short term for the stocks? It could make some people nervous. I mean, if you were invested in bonds a year ago, you pretty much got smacked around pretty good in the last year. Just look at that TLT. That's looking at all your 20-year treasuries there. And it's come down from the high. So I'm just saying a lot of it was priced in. It never hit the equity market. And are we inflated because of QE? Of course we are. For sure we are. When the QE ends, maybe, that's the argument, that the market's going to crash when QE ends. I just don't know if I see that happening. I think there's so many people that are still way underinvested in this market. Like, this is the most hated rally of all time. Ask your neighbor, ask other people on the street there if they're making a lot of money in the stock market. They're not. A lot of people got scared out and sold in 2007, 2008, 2009 during the financial crisis, and they never came back. Those people never came back. And now every time the market pulls back, those people come in and they want to be buyers. So yesterday, obviously, we got down, and we're in short term we might be weak, but long term here, do I think we're going to crash once interest rates going up? Do I think we're going back to 13, 1400? I don't. I think, there may be another crisis that comes on the table that drives it higher, but I don't think the end of QE and the potential to raise interest rates 1% is going to drive this market back to 1200.
You
or
know what? There's
1300.
another thing too that I think really bothered investors, and both you and Brent pointed it out.
What was that?
Janet Yellen giving that testimony. I mean, it just makes you want to hit the sell button. It's like
You don't like your voice?
spit it out.
Spit
What
it
are you
out.
gonna say? How about Helicopter Ben? Man, he got out of Dodge just in time, huh? A
Well,
nice maneuver by him to get out of the Fed, right?
you know who got out just in time was Alan Greenspan. Let's be honest, back in the day. Remember the bubbles that he created? He got out before the financial crisis, before, like, Bernanke was really the one that really got handed the bad deal trying to navigate through the
Oh
financial
yeah.
crisis there. So, you got to give Helicopter Ben a lot of credit here, because when he took over, he had a handful of problems here, and they did get through it. And I mean, if you look at the S&P now compared to where it was at 666 back in 2009, when it looked like the world was ending, Helicopter Ben, it worked. It got us out of there. Have we dug the hole much deeper? Probably, and how we get out of this hole long term. It's not by raising interest rates, I tell you. If they started jacking rates to 5, 6%, I think they know they
Okay,
cripple the
so
economy.
Perma Bull is not deterred by the change in interest rate. So we've just established that, Dennis. So you are not.
I'm not, and that's just it.
Get
I'm going
off
to
the
stay
fence,
on the
Humpty
long
Dumpty.
side and bullish here until I really get a real feel that there's another crisis coming. The thing that scared me was the financial crisis. Obviously, when we had, everybody, the whole world blowing up back then. That's, not on the table right now. That's not on the table. Is interest rates, going up 1% going to drive us back into another financial crisis? I don't think so. But you got to keep your eye on the macros, obviously, and keep your eye on the technicals too, Joel. Like you were saying, the technicals, do tell a story as well.
All right, guys in the chat room there, Roberto, Rich, you guys, JH3, let us know of our fundamental talk if you don't like it.
The overall
We'll
macros.
never do it again. But The S&Ps did get a dipsy doodle there. They really got pounded, during that speech. We mentioned it. We still are maintaining yesterday's low at 1842 even. We went to 44.75 in the pre-market. So let's just see if that area holds. Then yeah, we can brush this off. The thing that bothers me is if we do take out that 1842 level with a vengeance here. There's really no identifiable support until you get down to Monday's low at 1823.50.
You know what got killed yesterday on Yellen and what is getting killed again here this morning? It's gold, Joel.
Gold.
Holy cow. It got absolutely rocked yesterday and it's getting rocked here again this morning. We're down another 20 bucks on the April contract, trading at 1321 here right now. Here's a 3-day sell-off in gold. 3 days ago, 4 days ago, we're up at 1380. Just like that, boom, we get back a month of gains in 3 days, and it's not pretty here for gold right now.
And this kind of shoots a hole in my theory. I mean, if interest rates are going up, and that gold hasn't been doing anything it's supposed to do lately. But if you think that interest rates are going up, potential inflation, then gold would rally. That's not the case. I like the way this chart's setting up here, though. I mean, you've had a nice dip here, and you are coming into just a boatload of support here at the 1320 level. We 1329 20 90 is holding here in the pre-market, not getting the big bounce. Maybe people will be leaning on this level, maybe get a little flush out to 1217, 1218. But hey, if you've been short this thing since this recent rally here, you're right back at 1320, and this is a huge level.
Yeah, I agree. This 1320 level where we're trading right now is enormous on the charts here. This is kind of where we had consolidated for a pretty long period of time, actually. They're just looking back in late February, early March, kind of the whole area where we started really breaking out from there. So I think I respect this 1320. Yeah, a 60-point sell-off here a few days. Be interesting to see if the buy the dippers come in here around this level. Something else you were pointing out to me on the show was that silver really didn't participate in this rally here in gold at all, and now it's actually turning around and selling off here. So I guess if you were looking at silver over the course of the last month, it really didn't rally when gold was rallying, and silver is actually breaking down to 1 month lows here.
Yeah, I was watching it, and I just don't know if it, is correlate, what the correlation was. I mean, the spread got out of whack. Usually, when there's real fear in the markets, usually silver goes along with it. I don't know if there's any industrial, reasons for, gold being, higher, just different contract. But yeah, it didn't really go anywhere. It doesn't go up when gold goes up, and when gold goes down, it goes down.
Let's move on here and look at some of the miners here
Okay.
because obviously with the big gold sell-off there, you saw the miners get killed here the last few days. And let's just break down quickly a couple technicals here. I'm looking first at Barrick Gold. You always pick on me because I
I
go to
had it
that one
first. I already
first.
had it in there. I know you're on the delay, but I had
You knew I was
Barrick.
going to go to Barrick Gold, but look at this hole between 1850 and 1950 area where we
Oof.
consolidated looking late January, early February. For about a month, we traded between 1850 and 1950. So here we are at 1916, but another 60 cents lower here. You got to think there's going to be some people nibbling in and maybe some shorts scrambling to cover here below 19, don't you think?
Yeah, I mean it's been a huge decline in a short period of time. It takes all that time to climb its way up there, and then bam, in 3 days it gives all the way back, almost $2 back, trading near the $19 level. I see what you're talking about. There was a low at 1881, and then you had all these lows at the 1850 area. Just another example here of where you have support holding, support holding. Now it's coming back to that area. So now that it's a little ways away from here, but yeah, and then also probably quick math here. We had that rally in starting. Let's see here, starting from the 1542 level, got up to 2145. So what, 5 point rally. You take 2.5 off that 15.5, 16.5, 17, 18 is the 50% retracement between 18 and 18.5. So sure, that looks like that's where Bear Gold is heading.
Don't front run me. I threw out some orders at 1852, 1855 area though.
I'm at
So don't
18.
front run me, chat. They'll
Uh,
probably all be sitting at 1856, stepping ahead of my
no,
order.
no, they're going to be at 1855.01.
Newmont, Looking at this one here, I like the just below 23, 24 bucks. There's a couple lows there, 23.90. We are about 30 cents away from that right now here too. But I don't know why. I feel like picking bottoms here in gold today. You know, you're not supposed to do that. But what do you think of the new month chart?
I like well with gold being on supports might not be a bad idea here. You did have a double bottom into 23.88.94 level, so maybe if you get a little washout on the open. I noticed with gold stocks in the past, like if this opens up 24.05, let's say 24.06, and this thing's not back at like 24 and a quarter pretty quickly, then they just might pound it the whole day.
Couple other ones let's just talk about is Gold Corp, which is symbol GG. It is down 30 cents here right now. And this was one that actually came right back down to support there
Oh,
yesterday. It's kind of going through the support. I guess you got a couple lows in the 26 area, but what I was looking at, Joe, was at 26 and a half. We closed, we got down 26.67. So we're a little bit below that 26 and a half low that we made there about 2 weeks ago,
that
week
looks
ago.
like a scoop up here, at least on the first time when you have two, four, maybe six, seven lows within the same area the first time down. Boy, that sure looks like a good support area. Perhaps a better support area to cover is short and stick your neck out and go long. But yeah, even though it still has a ways to go to get back some of the retracement, at least when I see that kind of area when it comes down to it the first time, I kind of expect a bounce.
And if you don't want to be buying the dip, if you feel more like selling the rallies in these gold stocks here, I'll tell you the level. If you get in the next few days, if you get a pop for whatever reason up to 28 bucks, $28 was just major, major, major resistance for the better part of February and March. Finally, at the end of the middle of March there, just 5 days ago, we broke out through 28, got up to the 29, 27. That's kind of your head up there, forming. So you got your left shoulder, you got your head. If we were to consolidate here between 26 and
Oh,
a half and 28 for a few days, you'd have a beautiful head and shoulder. So I'd love to, try to get a short on, so here we're giving you a range here, 26.40 on the lower side. But if, we rally here in the next few days, if for whatever reason, I like that high 27s, $28 level as resistance.
yeah, that's if you can get the pop. I
If you
just
can get the
yeah,
pop.
yeah.
Yep.
I mean, you're getting the gold's bouncing off that. Our pre-market info, pre-market prep listeners must have been scooping up gold there right when we got on
Rally
this
two
show.
bucks.
Yep, rallied $2. Good job. It's probably J Dot or JH3.
Okay, let's hop into some of these earnings stocks here. XONE reported earnings last night. The 3D printer did not do well, lost 22 cents. We're supposed to make a penny. Revenue light too. They hate it when they miss the revenue numbers. 10.7 million versus 12.1 million. This stock is down a cool 10% here this morning, down $4.45, and is now actually challenging or getting close to the lows that we made back on the 5th. The low of the move so far for XONE has been 37.80. It's trading 39.30 right now. What's the pre-market chart look like? How low did we get here after hours, Joel, on XONE?
38. 38
38
dollars.
bucks. So just
Yeah.
20 cents above that low. So that's
Yeah.
the level. That's the level,
Yeah,
folks.
and the fact that, well, yeah, 38, and then you had the low back at 37.80, buck 30 away from that level. Pretty big windfall overnight here, so we'll see if we get a rally. You did get a nice bounce off that pre-market low. Let me bring up that pre-market chart for you here. You did get a little bounce back, so you can maybe use that $40 level kind of as a resistance point. You did pop back over 40. So yeah, I mean everyone was predicting this and came to fruition. How's it affecting the other stocks in the sector?
Triple D is trading down about a buck and a half here right now, so we are getting a little bit of weakness. Look at this level in Triple D though. 3 days in a row, we bottomed very close to the same. I'm looking at the 59.50, 59 a quarter, 59.53 level there, Joel. So just below $60, which is about a little over a buck from where we're trading at right now. It found some nice support there, and I wonder if we get back down there again, if people will be coming in and buying the dip.
Yeah, there were three lows in a row right in that area, and I think we talked about this before when the thing started to come back. You had when you have a spike low like that, then you had the big rebound. The spike low when they came out with their bad news was 54.63, and that was just kind of like an aberration. As you can see, it popped back over $80. Now you're coming back under 60. I think that that's more of a valid number because it wasn't like a panic low. So even if this thing start going through 60, I just think, all the way down. I mean, I would be shortening the area. I just don't think this is going to be one of those vacuum moves where if you do take out 60, you're going straight down 54, 63 because there's too many people that, of course, shorted it on this rally, were short before. They're going to use that opportunity. So I'm not. I mean, it's holding up pretty well on a relative basis. And what's the other one? Let's see if I can get it right. SSYS.
Bravo!
Yeah.
Yay! Even the news desk giving you some love there, Joel.
That's trading down to a couple sticks.
This got a big level too, just bringing up the chart. That whole 110, which is
Ooh.
$3 from where we're right now, but wow, that was huge too.
All right. Well, we got some.
Chris, Chris, who we had on the show, Chris Banning, who we had on the show yesterday, he's always active in these stocks, and he says the SSYS is best in breed. That's the one he likes the best. So he said, if you're looking at these things as investments, I'm not saying you should look at these things as investments. He likes the SSYS the best. But I always talk to my jewelry store buddy there, Barron's
Oh
Jewelry
yeah,
in
we were
Windsor.
talking. We had that discussion. Go ahead, tell him about
Yeah, and
that.
Pete, and he's got two of them. He's got a triple D printer, and he's got and this is for his jewelry store for making molds. We should bring him on the show sometime just to give him like a quick 5 minutes to tell him what he uses these printers for, because both are over $100,000 that he's spent on these printers. So he's got two printers, $100,000 a piece. So he's talking, like these are like not little retail printers. He's making them, and he's been complaining to me, saying that the problem is he thinks the technology is awesome, but it breaks all the time. His one machine, his SSY, the one I think by both of them, he says both of the machines are broke right now. When you buy them, I think he give you a 1 year warranty or something, or a year and a half. Or he says, but that's the problem, is that warranty is ending for him now, and now they want him to buy a service package for $10,000 a year to keep servicing it. And the one machine's broke 10 times in the last year, and the other machine's broke a couple times. And he says, they're trying to get the machines out there so fast, and they're not perfected yet. It's very early, obviously, and he says when it's working, it's awesome, but he says the damn thing's never working. And he's really been complaining about that. So, I mean, that's something to consider here. If some of your end user customers are starting to get frustrated with the machines breaking, I don't know, maybe he's just got two lemons there and it's not indicative of the entire industry. But that's an interesting point, though, that he's making.
How much is that service contract?
He was saying it's like $10,000 a year. So it's a crazy amount of money. I mean, you're talking serious dough there that they want to come in to keep servicing it.
If it's breaking 10 times a year, it almost might be worth it, kind of
Well, that's
thing.
what he says. He says they
Right.
almost give you no choice to buy the service
Yeah.
contract when it's breaking that much. So, he's frustrated, but he does say that the technology is awesome. He's a believer in the technology. He says that, it can really, do some great work for him when it's working. But the problem is, he says it's always broken.
Why did you?
So-
Why did you tell me this like 2 months ago or a month ago?
Yeah, so I don't know if that's what's frustrating people. I haven't really heard much about that on the news, like the machine's breaking. So maybe he just got a couple lemons. Maybe he had bad luck and got a couple lemons here. But I was looking at, remember I bought the triple D on the dip day of 55 and I resold at $68 3 days later just because I thought it was too much too fast. And I've been looking at nibbling back in the 3D systems, but I've been kind of holding off here just because of what he's saying. I'm kind of now, a little bit skeptical of it all, that maybe they're pumping these out too fast. But he thinks the big money that they're going to make is selling these service contracts. That's where once they get the machines out there, then if they can sell these service contracts, that's where they can really make some money. So that's his thoughts anyways on the 3D industry.
You know what? I was just digging around as you guys are talking about this 3D sector. I'm noticing that there was a RBC note this morning, analyst saying that he thinks HP entering the 3D printing market does not necessarily indicate there will be an increase in competition within the sector. So
Has HP officially announced that they're entering it, or is it just rumors still?
I think
I mean, it's obvious that they probably will.
Yeah. I think they had like a bolt-on acquisition, maybe. I think
Yeah.
recently, and think that.
Because I just wondered if they would
confirmed.
come in and scoop up one of these companies, but maybe not. Maybe they think they can just come in and do the technology better than the others. So I don't know. Let's talk about Hewlett Packard just quickly,
I
though,
knew you were
because
going
they
to say
actually
that. Yep, they
that-
raised
that
the
stock-
dividend.
that stock was a monster yesterday again. So obviously, what was the catalyst 2 days ago? Who upgraded it, Brent? Do you remember? My goldfish memory. I always forget everything.
I'm
2 days
gold-
ago, there
I'm
was an
gold-
upgrade.
I'm goldfishing with you, Dennis. Let me see.
You're- All right, Brent will go hunt down who was the catalyst that started this whole.
It was Barclays.
Barclays upgrading the stock. It
Yes.
broke out through the 32 days ago, got high, closed up near the highs at 30.56 that day, and then yesterday just never looked back. Didn't care about Janet Yellen's comments, didn't care about anything. They kept buying the stock up. This morning they're raising the quarterly dividend This, if you can say this is a raise, from 14.5 cents to 16 cents. So I'm not getting too excited about that. But man,
Yeah.
you got to respect this breakout in Hewlett Packard, though.
Right, the stock has been waiting to make a move. Is flirting with the $30 level for the longest time. Broke above that. I don't know, man. This is the fifth day of huge gain, or yeah, fourth day of really huge gains here. I'd be a little bit leery on this one. Pre-market, they bumped it up. After hours, they bumped it up. Just recently, 31.68. Yesterday's high was 31.74. Get me above that level. Hold that level, then maybe take a shot at 32. But this one looks a little lofty for my taste. I've been looking at yesterday's high as a potential exit point on a long. Don't know if it's quite ready to start shorting yet, but this is going well over the 2-day move for you, Dennis. We're getting back to territory that we haven't traded at since August of 2011.
We'll ask Fari about this one. He always likes to call stocks when they're going to pull back. He looks at the sigmas and everything. So we'll have to remember in 10 minutes when we get Fari on what he thinks of the Hewlett Packard and if he thinks it's going to pull back today or not, too. What I think is he might get an initial pop and then a drop. So I'd look at it first at the whole 32. You know, I like the whole numbers. I'd look at that area, the 32, and see, if we slowly took that out, maybe we catch a few people going through there. But look at Procter and Gamble yesterday, too, Joel, just to talk about stocks taking out big whole numbers. Actually, it was 2 days ago, I guess, that it did take out the 80. It wasn't yesterday.
Right.
But it took out the 80 just by that schmidgen, got up there at 80.08, knocked out the 500,000 shares that were at 80, and then came back down through it. Sat there, and then yesterday's high, and here's an example where I guess I got to look a little bit better. I had orders sitting out there to sell this stock at like 79.90, I think 394.95, spraying in front of the 80 handle. Of course, the high is 2 cents below where my limit order was. 79.91 was the highest day, so I just missed it. And obviously, mostly Yellen knocking it down, but the stock just cascaded down through the entire 79 handle yesterday.
I was looking at this one intraday. I was doing an update, and I noticed that it had a low at 79.51. That was the low on the 18th, and it came down there intraday, and it took it out, and it just didn't bounce. Usually when the levels that we talk about, if you hit a previous day high or low, you want to see a good reaction, a good bounce, and I just was looking. I'm like, man, this thing can't even get back over 79.60. And then boof, next thing I look at it was under $79.
Yeah, they
But
really killed it.
yeah, but Dennis, can we just shift gears a little bit here? I just want to cover
Yep,
some of the social media stocks here.
sure.
I guess it's the big three, huh? I guess it would be Facebook, Twitter, and LinkedIn. First, the Facebook is this chart looking tired to you?
Well, you just look at that, and if you're a pattern trader, you're seeing a little bit of a head and shoulders thing starting to happen. You got the left there all around the 70 area, a little dip down, then the breakout with the head between 70 and 72 there, it's 72.15, and then they took out the 70, tried to get back up there a couple times to retest 70, hasn't had a lot of luck, and now it's kind of is looking tired. So below $70. I think the stock is not looking that bullish. Above 70, started to get up to 71, 72 again. Then I'd start getting interested because the 70, I think, is the critical level here. If it stays below 70 for too long here, it could start breaking down. If it starts to get back, if I'm going to stay bullish this thing, I've never been bullish Facebook. It's been one I've been wrong about for a long time. So take everything I say with a grain of salt. But above 70, that's where I would start getting interested in Facebook. Below 70, I think it's a little bit scary here.
Yeah, I've tried shorting this thing on weakness here, and not always with the best of luck. So I usually try and wait for a rip roaring rally, and then it goes another dollar, and then I, say I should have waited. But you are coming down to a couple important lows here. You had a low on Monday at 66.62, and you had a couple other lows right in that area, 66.51 on the third. So still a buck and a quarter away from there, buck 30. Use that as support here as a potential bounce under that area. If it whooshes down to 66, try and be patient, wait for like some kind of a rebound. But this is looking a little bit heavy. Then let's go to LinkedIn, and this stock just doesn't get any love anymore, Dennis.
It's just been kind of quiet here, really, ever since it wasn't in earnings or something when it broke down below 200 there and got down the whole 190s. Then it got a pop, back up over 212, but found major resistance up there. And every time this thing gets up into the whole 210 area now, that's been the critical level where the stock starts pulling off. Did get up to 205 yesterday, but it's kind of just not that many people are that interested in it. Yeah, and you don't hear much about it even from the media lately.
You could draw a little trend line here if you want. I mean, you could even get
Yeah,
holy.
it's a
So
nice trend,
yeah,
nice
yeah,
downtrend.
get there, down trend line there. Alert our traders. Yesterday's low 199.61. That's minor support. Major support though down at 190.82 to 191.92 level. You had two lows in that area. And let's talk about the big gun here that nobody talks about anymore. Poor Twitter. Look at that, Dennis, sneaking back in at that $50 level.
Yeah, well, we talked about this 50 and it went up and it almost kissed it there 2 days ago. It got down to 50.29. I still think what's going to happen. I put the scenario on the board 3 days ago on the show. I think it's going to take out 50, go down to like 49, sucker everybody to get out of their lungs because there's so many people leaning on the 50 level. So, if it went to 49.90, I don't think it's enough. I think it might go down like $49. And then the time I'm going to get interested is if it comes back up over 50. So I don't want you to go out here and pick a bottom of 49 and say Dennis is going to think it's saying the low is going to be 49. I'm saying that scenario could set up where you could get the breakdown here could end up becoming like a fake down. So where you have so many people that are leaning, they're going to get out, they're going to shake out. Then you have people getting short saying, oh, it's through 50, it's going straight to 40. I can see it on the charts. There's nothing below there. And that's what it would look like from a technical perspective. But just be careful if you're going out there shorting it through 50. I don't want to see this thing starting coming back up to 50, 51 if it does that.
What
So
about
I think it takes out 50, and I think then eventually it might start to show some life actually after that.
Aren't you tempted to short it and use that $50 level as a place to cover the short?
Yeah, yeah, you know what? You could play it that way too, because I do think eventually it is going to take out 50 here. I don't think this double bottom holds. I think unless somebody comes out and upgrades, and that's always what's in the cards here, because we know an upgrade. Look at Hewlett Packard with Barclays 2 days ago. They come out, Barclays comes out, upgrades it, the stock just starts taking off. So that's what changes things is when you get a ratings change on the stock. But right now, I think all other things being equal, there's no analyst moves, nothing said from the company. I think eventually it will take out 50. We just come too far. It'll want to hit stops, and we know we're going to get a lot of stops through 50. And then we'll have to see what happens after that.
Yeah, just the last thing on this, and just pointing out a little way that Dennis and I filed the technical analysis. If you go back to Friday and Monday, he had two closes in a pretty similar area, 51.92 and 52.05. And then lo and behold, that's a key area. Two closes in a volatile stock like that makes it a key area. Well, lo and behold, on Tuesday, you got to pop 16 cents above the close, 52.21, but that did not hold. So were you using that double close, a significant area, you could have had a decent short. And now you come on Wednesday, you don't even get to the $52 level. You make a high at 51.98, but you don't make as low. So I'm using, if you want to buy, keep an eye on the $52 level as major resistance and 50 as major support. Before we go to Fari here, DJ's talking about something, a million share buyback or buy sell. Was there a big trade after hours in GILD? Did you happen to catch that on your radar, Dennis?
I can go back and look at the prints here quickly. Brent, did you see? Actually, yeah. He's looking at 1 million shares. Was that the closing print on Gilead at 1601.58? There was 1 million share print at 77.19. So that is pretty significant, actually. I'm not sure if that was a cross or actually what that was. Try to go see what exchange that happened on. Yeah, so it looks like an off exchange trade, actually.
Oh,
I'm wondering if
really?
that was just a big cross there of 1 million shares. So somebody wanted in and somebody wanted out. It looks like it's 77.19 because that's some pretty serious size there on Gilead.
I mean, this has had a pullback. This would be something that Harlan would probably be all over here. It's definitely an uptrend. It's pulling back now. It's had four higher lows. It's not having the concentration of lows that you had, like in the stocks that he was looking at. I'm trying to think. Orbitz that got killed yesterday. We'll have to talk to him about that next week. But I would just when I see a significant print like that at 77.19 or whatever, someone's either long or short at that price, so they're going to be, wiggling out, both ways. And, if the company was buying back stock, I mean, that could be a possible scenario. They're looking at value there. But, DJ, just use that trade as a reference. Okay, we're going to take a quick break, and it's time for Fari
Actually,
Tiz.
yeah. Yeah, we'll take a quick break. He's already chirping me on Twitter there, Fari. So he's
Okay.
saying about my whole numbers thing. So we're gonna go grab him. He's saying, do I like whole? If I like whole numbers, do I like whole milk?
Okay, we'll be
Let's
right
go get Fari tail.
Welcome back, traders and investors. Fari he's a little under the weather. He's not very energetic today, right,
Yeah,
Fari?
he's attacking me with the whole numbers. He's making fun of me with my whole numbers.
Go ahead.
Good morning, guys. Always a pleasure to be with both of you. Both Dennis and Joel. You know what? We have a little feedback here. Let me kill it.
Okay. All right.
Go
You sound
ahead.
good
Go
on
ahead,
our
sir.
end. You sound good on our end, but how's it going there, Fari? What'd you think of Janet Yellen there yesterday?
Oh, Jesus. She was, you probably saw my tweet on Hamzei Analytics, at Hamzei Analytics. I said, Auntie, we didn't order spaghetti. I mean, did you see that 5-minute tape starting around a little bit after 1 Chicago time? Just a little bit after that. It just went wild. And let me make sure I'm on 5 minutes. I'm on the right perspective here because this was 30. All right, yeah, if you go back and you'll see, holy macro, I stopped trading at one point because I figured, I'm going to give back. This is just too wild. And I've got we do some managed futures. One of my investors calls me back. He's watching it live, of course. This is FOMC, right? He knows what to watch for which day. He's looking at his screen on his data lens, comes back to me and says, "Why did you stop?" I said, "Young man, this is the Navy. I call the shots from here, okay? You want to trade it, you take your account. Until I'm trading it, I call the shots. You have no clue what's happening here with volatility. We exploded in 2 waves, okay? And, of course, Brad Sullivan, our hedge guy here, he runs a small hedge operation here in Chicago, a few billions. That's it. These days, by these standards, few billions. He has talked about 1840. Okay, the low was 42 even. Now remember, when Auntie Jeanette started speaking, we were trading at 66.
We were trading right near the highs. We were trading.
Yes, correct. Absolutely. Bravo. Yes, 67 and a quarter, I believe, was the IB high. The first hour initial balance high was 67 quarter. We were right before she started. The last print I see here was a 66 quarter, 1866 quarter. Okay, the low for 1842. Now, if you do the math, okay, at $50 a handle, that's what I say. If you trade ES one time, you'll never go back to anything else. It was wild, and I was exhausted. Now, let me give you some perspective. Okay. The night before, I traded because it's the pattern. Into FOMC, they push it up. They juice it up because there's a possibility one of these talking heads will ask a stupid question, puts the chair on the spot. I'm talking heads. I'm talking about like what do you call it? John
One of the
Hilsternat, I guess.
senators.
I'm having a hard time with his last name. And also Steve from CNBC. These guys will ask something like they think they're a Fed insider. They'll ask something out of whack. This is the first time she's on a press conference after post FOMC, and something out of whack will come out as the answer, and boom, we could go nuts. And I think at one point she did say that. She said in 6 months. Remember when she said something in the order of 6 months?
Yeah, she gave an actual kind of timeline when the QE might end, and she said next fall, which everybody knew she meant this fall. And usually
no, not just that. No. She also said when they said when is the interest rates going to go up after the QE has ended?
That was.
She said something in the order of 6 months.
Yeah, 6 months after QE had ended.
Which wouldn't be a year from now, exactly. When she said that, boom.
Banked them.
Yeah, and what you do on those, what you want is something like what I call like book trader that Interactive has, which is for money managers. You just click. You focus. You look at the screen. Forget about what they taught you in economics, and you click. Just make sure you don't click the wrong item because buy and sells are next to each other. And make sure your size is correct. You have to dial your size because this is not. You don't trade one or two contracts here.
All right, Dennis.
This is a gift.
Dennis and
You know how the Fed helped out Citigroup and what do you call it? What was the other guy? B of A. Yeah, I forget the name. The guy who ran B of A.
Brian Moynihan.
Kenny Boy. You know how they Ken Lewis. You know how they helped them then in January of 2009. Every 2 months, FOMC helps individual trader. What you have to do is take advantage of it, and make sure you got ice water running in your veins. If you have blood, you got problems.
So when you heard those comments, you just hit the sell button, didn't even look back.
I was already short. No, I was coming short.
Oh, you were
but I
already
exploded
short.
in my size. Yeah. And you know what? You can't sit there very long on size, okay? So you really got to pick your spots. But it was taking a level out, which is called level 2 IB low. That is very bearish mood coming in. And it's FOMC. So we dropped 3 levels below that on the first bar and 2 more levels below that. I mean, I went out of options to see the levels in terms of pricing. It was going so fast. So my gauge was what Brad Sullivan had said, which was 1840.
When did you start selling? What level did you start selling at? Like you were saying before those
right after we had a price failure at 62. Let me give you a timeline. Hold on.
Yeah,
Hey,
I'll be more than happy to send you guys this chart. I'll post it for you.
Fari, while you're looking for that, Dennis and I were having a little bit of a debate beforehand, and I was just, contemplating because the S&Ps had given you a double top at the 67, even 67.50 level, and it had really held up there. So I was talking about a possible trade of, leaning on that level, double top, a stop above it, and Dennis was like, hey,
For how long?
I mean, just a short, a short-term trade, like being shorted that.
No, I'm an engineer. Give me a number. For how long? A
For
few
a day
hours,
trade.
a few days?
For a day
What are we
trade.
talking about?
Day trade.
Oh, day trade. Okay. No, I expect today to be a tough day down.
Okay. All right. Well,
Did you see what I posted last night by Jason Gupford, sentiment trader?
No, I did not.
He doesn't trade. He's an analyst, okay? But he won the Charles Dow Award at MTA. That means he's one of the right guys, okay? He talked about the negative. Did you notice it's negative 1600 tick?
Yes, I did. Yep.
Okay. Do you know how long we stayed down there? We stayed like 6 minutes down there.
Really?
Under 1400 negative. I mean, when you do that, then you got a signal to noise ratio. Now you got to go back and look at some sample size. I did a post which some people didn't like. The bulls did not like. Okay, but remember, he's not taking side. He's just telling you what he sees statistically. I sent it to my subscribers overnight, saying, guys, look what Jason is talking about, and I'm trying to find. There we go. I'm reading it to you. It was posted at. Hold on 1 second. Let me close this baby. I got too many screens on. Hold on. It was posted. Last night around 6 p.m. 6:40 p.m. Chicago time. Let me read it to you. At one point on Wednesday, the traders did not take a shine to the aftermath of MC, the release, more than 1,500 stocks trade on a downtick than trade on an uptick on NYC. That's rare. I put my levels around like 1,200 negative. This went to 1,500, and then, of course, the low tick was negative 1,600 and change. That has only happened twice before on the day of FOMC released their outlook on interest rates. Those days were August 9th, 2011. Remember that one, right? When the S&P changed our ratings. Remember that?
Yep.
And August of 2011. And June 19, 2013, last year. We can't read much into this. So far, what it's worth, the S&P has declined the next day. Are you with me? By negative 4%, 4.4%, and negative 2.5%, respectively. Then bottomed and rallied after that. Now, of course, the 4.4 I remember very carefully because we had 4 days of that next to each other. 4 up, 4 down, 4 up, 4 down. That was very rare. Brad Sullivan again, came up and said, listen, because remember, these guys don't day trade. The both sides is too big, okay? You got to pick your spots. He said, look, 3 weeks, 6 weeks, 3 months, we're going to be rallying. This is the time to pick up some bargains. And he was dead right, if you go back. As long as you could stand the early part of October shake, 2011, which is we have enough data to believe PPT has stepped in, Plunge Protection Team. All right?
So are you getting bearish, Fari? Are you getting bearish? Is that all what you're trying to tell me here? Is that you're done with the 1920, 1930 projections? You're just getting downright bearish here? Is that what you're saying?
Not listening to me.
I'm listening.
What did he say at the end? And then bottomed and rallied after that.
Yeah, so you're lucky.
Let me see the caveat. Hold on, Joel. Let me give you the caveat. Two sample points. If today happens, would be 3. That's not a big sample size. Okay, a statistical sample size to be valid, you need at least 30. So these are rare things, okay, where we have such a bad push on tick. I consider it was her first time. You know, on the press conference, that's a very heavy-duty responsibility, okay? She may have not done everything perfect. She's studying those tapes. She'll be better one next time. But I do expect to be slightly down. I'll tell you what happens next. What do we have tomorrow, gentlemen?
Triple witch.
No, quad witch.
Excuse me. I'm in the Fari Dog house.
Get him on a boat to Murmansk now. Give him a free ticket to Murmansk. No, it's quad witch. Now, so we could have a huge shake tomorrow. Now, I like to buy Monday, Tuesday.
So okay? You like this couple days here of weakness, and then that's your big opportunity to get long.
To load up and go to 1920, 1940. Yeah.
So where do you think the low? Are you projecting a number here where you're going to start?
Yeah, well, I like 50 bar coming in. That's 1831. That's not a whole lot. I think we might be able to, if we go, I mean, things have to line up, okay? We got to have some bad issues. But if things line up and people get nervous today, by end of tomorrow or Monday first hour, there's a lot of ifs here, guys, okay? Maybe we can breach 1800.
Whoa.
On the cash.
Whoa.
Yeah. Well, hey, Murray, I want a discount.
2 to 3% sell-off from here.
Yeah. I don't see 4. I don't see it one day. I see it more cumulative. You know, between this and expiration tomorrow. Yeah. I could be absolutely wrong, but Murray, I want a discount. If I want to buy, right?
I got a question.
If it gets down there, you're going to back up the truck and start throwing some stocks in.
Not every stock, but good ones, clean ones.
Which
and the ones with some Momo. I like Google. I love Google. Yeah.
Google?
I love Amazon. Okay.
Amazon.
Solar City. My dear one is Tesla. I'm not sure about Twitter. Let's see. WDay. I like WDay. And also, you know, I'm very confused about FB. You have no idea how many block trades we get on FB. So much block trades are coming in, we stop posting them. So I don't know about FB.
What the institutions are doing. You don't know what they're doing on Facebook. They're just jockeying positions here right
now. Well, we have all kinds of people there. That's what creates these block trades. We got small guys coming in, and then one big guy. You turn around, repeats again, 2 minutes later. 30 seconds later, same pattern. Bunch of small trades and boom, one big one. Yeah, that's a lot of noise. Where's the signal?
Fari, I got a tactical question for you yesterday when you were shorting. Now, you said that, you know, Brad had the 1840 level is the key level.
Oh, by the way, let me give you the level that you guys asked me also. Let me give you time and level. because it's very clear on the chart, and also we have timestamps on Interactive. The failure occurred around IB low, and the timeline was at about 1340 Chicago time. 140. The level was 62 area. If you watch that, we came down, okay, slightly. I was short. Came back up, went against me, and then it didn't get there.
Right.
All right.
That was right in the close area. But my question for you
Yes.
is that
No, not close area. No, we closed at 52, sir.
well, you would
He's saying 62. He says once it cut through 62 that second time,
No,
that's
they
really
came up. No, yeah, cut through, came down, tried to go back up, failed.
And then-
Okay,
and then failed, and then
like
come back.
Gatsby, yeah, came up to get to the air, couldn't, and sank.
right.
And
Well,
that's the time I pushed. And you see that big bar, and then that one, you don't need. That's just physical. You're seeing it.
no, I
You
was
just
I
press
was
it.
referring to that 62 area.
Yes, sir.
The close on Tuesday was 63.75, and that was up near the
Okay.
high. But my question for you, and this is a tactical question, you were short,
Yes,
okay?
sir.
You had
Yes.
1840 as a number, okay? So
Right.
do you have a position, so do you start layering at like 45, 44, 43, 42, 41?
cover.
To cover.
To exit?
Yeah, or
Oh,
do you,
absolutely. I pepper them.
you pepper
As a
'em.
matter of fact, I don't even pepper that far out. I pepper 2 or 3 points below. Because it's happening so fast.
So then you never
Remember,
would've covered your
all
short.
projections are that. Exactly. Just projections. We're dealing with possibilities and probabilities, as Steve Shobin said.
Where-
Probabilities and possibilities. This is not engineering.
Where did you get
It's
to
not
cover your
precise.
S&P short yesterday when it broke down to 42? If you were looking at 1840 as your low, is that basis the cash or was that basis? I
No,
mean,
the
the
future.
futures. So
Future.
that didn't
So
get to that
I am
number.
happy.
How'd
Listen,
you get out?
we're trading 62s, and I'm short. I peppered in 58, 57.
I gotcha.
It starts
I gotcha.
moving down. Cancel all, replace it down below. Cancel all,
Gotcha.
replace it down below. It's still coming.
Gotcha.
If it's
Okay.
getting-
your
if
judgment
it's
won't matter.
cascading
You get the
down-
feel. You're feeling it.
Yeah, if it's cascading down, and I'm looking at 1 minute. Of course, we have a bunch of other indicators. CIs are turning. CI dips are turning. MAC is just completely, it's just getting imploded. MAC is usually a tick or two ahead of ES. That's our proprietary indicator for trading ES. When that's imploding, all right, what I got to do? My exits could be too close. And the other question becomes, am I short enough?
Right.
Remember,
okay.
think about who's at most risk. Everybody and his brother was long.
Right.
Oh, it's FOMC. She can't mess up. This is her first one. People will give her a second chance. Yeah, right.
Okay.
Yeah, come on down, baby. Yeah.
All right, Fari.
I got news for you.
Okay.
So,
All right.
it was an excellent day. But there was some there was no question. There were some bumps back and forth. And also, I had made a couple of mistakes manually. When you're doing those who live by the sword shall die by the sword. When you're trading the book trader type, which is you're trading the ladder, you have 2 keys on the mouse, left and right hand.
Yep.
One
you
is
know
for
it.
limit order, one is for stop.
Yep.
And it's a physical location. If you hit the wrong one,
Boom,
you
boom.
bought it. It's yours.
You own it. Okay, so Fari, we
Yeah.
got your scenario. You're looking for this 1842 to get taken out today, a little 1 or 2 day washout in the expiration, and then perhaps bottom around the $1,800 level and sit up for another.
Yeah, we're at
leg.
47 right now. 42 is not that difficult to take out.
Right,
And we
I
just
agree.
see what kind of day we're going to have.
Okay.
Now, it's
Okay.
also your day count. Keep track of your day count. We basically reset to 1 yesterday
Okay.
because of what we had Monday and Tuesday. If you look at your day count, we talked about 3 days down, right? Yeah, we've talked about it before. Some of your listeners have actually written to me. I appreciate that, asking questions, clarification, because time was short. But if you look at it here, we're reset to day 1 now yesterday. Today's day 2.
Okay.
And with day 3 being tomorrow, expiration, hello. This is an opportunity to
Ducks are
push it.
lining up.
Everything's
Ducks are
lining
Yeah.
up. All right, Fari.
Now, one more thing. One
Sure.
last thing.
One
One
more-
last
this-
thing.
one more
I told
thing.
Kyle, hold on. Yeah, give me some extension on that.
We got
I
you.
told
We got
Kyle
you,
I'm going to
son.
charge you guys twice of normal for today. Double the last charge you last week. Yeah, exactly. Yeah, invoice times 2 because this is Persian New Year at about 11:57 Chicago time. It's the spring equinox. That's when Persians have celebrated for 3,500 years the New Year. Now, what happens on equinox? Why is it equinox? It's a lineup of the planets. What happens on equinox? Yeah, no, the pressure on the gravitational force on the brain. Gravitational force on the brain changes. That's why a lot of reversals could happen. fall equinox. We see it in the spring equinox. So now, it's not a precise date. If you go to Chris Caroline, who does a lunar calendar and that kind of studies, you'll see he'll give you a window of 2 to 3 days for reversal, plus or minus. But we're in that zone also. That starting today, with a +1, +2 area, that it could be between now and Monday, we could have a reversal.
Okay. All right,
So
Fari.
keep your eyes open and good luck.
You'll be sorry if you don't listen to Fari. Thank you
Joe
very
has to say his corner.
I got to
thing,
say my quick thing.
Fari,
Fari, thanks
thank
a
you
lot,
very
buddy.
much.
Have a good trading
Anytime,
day.
sir. Always a pleasure, sir, to be with you.
Okay, bye-bye.
Bye-bye.
Everything's lining up, Joel. Everything's lining up. The planets are even lining up for this sell-off, Fari's saying. So he's excited today. He's pumped up, and he's looking. He's got his targets. He's got his convictions here. So you got to give him that. And I agree. If we follow through and start taking out 1842, I don't know if I think we're going to 1800, but I think you could set up that scenario where you could get a 1 or 2 day washout here, and then that would be your buying opportunity.
Violin Maker says Fari is the man. If Violin Maker...
The energy that guy brings. Holy cow, man. It's like, wow.
he should have been a pit trader with me back in the S&P 500. I mean, that's the way. As soon as that bell went off at what was 8:30 Central Time, everyone just became total animals. And no, Fari's excited. He anticipated the action yesterday, looking for more follow through here, looking for a wash up. He has the best thing to say is he has a plan. He has a plan,
yep.
And I think I know what it is for the next 2 days, and he's sticking to it. So, Dennis, we got a few minutes. We're going to bring on J.C. Parets of All-Star Trends, and he better be drinking some coffee and having some Starbucks here because he's going to have a tough act to follow. But we'll just ask our traders in the chat room if there's anything that they're looking at, or Dennis, you see any imbalances of note? Or
you know what? It is interesting actually here, and this might set up. We're down 4.5 points on the S&P futures, and I'm looking at the morning data from the imbalances here, and I'm seeing a lot of buy imbalances, and this has been pretty consistent here for the better part. They come out at 8:30, and the last 27 minutes they're all buy. Look at General Electric. It's trading 3 cents higher here right now. That's a stock that's very correlated with the overall market. So S&P futures down 4. G has a buy imbalance of 276,000 shares here. So that's telling you if this buy imbalance sticks, this stock might open a little bit too high, give you an opportunity maybe to try a short. Looking across the board here, Pfizer's another one. It's got 136,000 to buy. Was just ticking up. It's up 9 cents. People say, oh, why is that trading up? It's trading up because there's a buy imbalance on it right now. And that's telling you there's more people to buy than sell off the hop, at least in the New York book right now. And that liquidity, that will become a trade at 9:30 when the designated market maker on the floor puts it together. AT&T right now has a buy imbalance of 166,000. Verizon, a buy imbalance of 90,000. Bank America, a buy imbalance of 148,000. Across the board, there's mostly buy imbalances here today. So one of two things has to happen here. There's obviously going to be a nice arb off the hop if the S&P futures open down 5 and all these stocks open higher, or the S&P futures are going to slightly reverse, or these imbalances are going to flip. So right now, as if they were to open right now, all of these stocks would open higher and the S&P futures would open lower. But I think you're going to see a lot of this start to get offset. Maybe the futures start to drift a couple points higher here if they don't in the next half an hour. But Procter & Gamble, 70,000 to buy. J.P. Morgan, 82,000 to buy. Morgan Stanley, 40,000 to buy. It's pretty much across the board buy imbalances.
Dennis, do you just go with your fair value number on something like this to try to short into some of these imbalances, or do you would you like it to line up in a chart? Because I was looking like the GE, with the buy imbalance. If it opened up anywhere near 25.50, or actually it's not going to open up that high, but you had 3 highs at the 25.63 to 73 area. I kind of lean more towards is when they're opening into those highs or resistance level. Now, if you're shorting this thing, currently where it's trading, you're kind of out in no man's land. Do you rely on the fair value, or do you, what do you do? What's more
Couple
important
ways
to
to
you?
play it. And it's a great question. Couple ways to, and just quickly, because I've got a spreadsheet where, and sometimes I use that if I'm feeling it. If I feel like there's just too many, I'll spray out, all
Okay.
the top S&P components, 30, 40, 50 of them sometimes, and throw out all the orders. Just basically hits, the sell, and it automatically does a calculation where it'll go 0.3, 0.5% of the overall fair
Okay.
value using the betas and that. The other way is sometimes if I'm just not feeling, if I just like a few of them, I do them manually, and if they line up, like look at this Bank America right now. BAC with a buy imbalance. Look at yesterday's high. Yesterday's high on Bank America, and this is only a $17 stock, is 17.49. There's a huge guy at the point at 17.50. This is a stock that could potentially open up right into that guy and give you a nice opportunity to short. Above 17.50, maybe you need to cut out. But this could open up at like 17.47, 17.48 and puke. So I'm looking at that maybe, as an opportunity to try to get a short.
Okay.
So all I'm saying is when there's these buy imbalances like this, market's down 5 points, there's potential for some arbitrage here, some early morning arbitrage and stat herb stuff, and that's what I'm looking at.
Okay, Fari Junior.
I was gonna say that was
Fired up. All
probably
right.
the longest cutoff aside from Fari today, Joel.
Okay. All right. We got to take a break. Get JC Perret of All Star Trends on. We'll be right back. Welcome back, traders and investors. We have JC Parets on of All Star Charts, ready to give his take on the market. JC, how you doing today?
I'm doing very well. How are you?
Good, good. We just had a great interview with Fari Hamzei, and we're ready for a great interview from you with talking about the markets. And Dennis and I don't know if you caught us at 8 o'clock. We went on a little fundamental rant, and just talking about the whole interest rate environment and and Janet Yellen is telling us that interest rates are going up, and yet the market's not cratering. So just looking at everything from the year perspective, your big winners and your big losers this year, what asset classes you think people are going to be dumping, and where do you think there may be some buying?
Well, I mean, think about it. We're almost done with the first quarter already, and the stock market is flat for the year, and commodities have been ripping all year, and treasuries are up with interest rates down. So I think that we should expect more of that. For a lot of reasons, and we look at a lot of cycles, and we do a lot of like macro work in terms of, we look at the presidential cycle, we look at the decennial cycle, we look at long-term secular trends going back 100 years, and all of these cycles kind of agree that 2014 for the U.S. stock market shouldn't be a great year. It doesn't necessarily have to crash. We could do nothing like we did a few years ago. But cyclically, this should be a slow year, so I don't think this should be a surprise at all.
So you're looking for more of a consolidation, defined trading ranges here with the all-time high and perhaps a support point, or a little bit more volatility than that?
Yeah, I mean, we should expect volatility. I figured the S&Ps were a fade coming into the year, and we haven't done anything. We've essentially been flat. We're probably going to head lower. I like bonds. I think rates keep dropping. I mean, ever since the Federal Reserve stopped trying so hard to keep rates down, rates have done nothing but go down. So I think that that's something that we can't ignore. And no, sentiment-wise, bonds are still hated. And we came into the year very, very bullish bonds, and so far so good. And I think that dips can continue to be bought. I mean, from a tactical perspective, if you're looking at TLTs, for example, which I know a lot of market participants use that for treasuries, I think you could stay long TLTs above 105.5. I think that's the spot.
Yep.
You get a nice re-entry if you missed, the initial move from the beginning of the year in treasury bonds. You had a nice entry point last week, and we're talking about it on the stream, StockTwits and Twitter. TLT's a buy right here. We rallied nicely, but I still think you could keep your stop losses above those levels. And it looks to me like treasuries are going a lot higher.
What you're saying kind of fills a void that Dennis and I had in our discussion today, because we were talking about, well, if everyone's worried about interest rates going up, and and there's going to be a significant move, and that possibly inflation pressures, then what the hell's happening to gold? Then gold should rally, correct? And it's almost as if the gold market doesn't believe that interest rates are going up here, and they're pounding gold. So is that would that fit in your thesis at all?
I wouldn't necessarily say they're pounding gold. I mean, gold sold off in the last 4 days, but gold has been the best asset on planet Earth since the beginning of the year, precious metals as a group. So just because we declined for the last 3 or 4 days, I don't think you could dismiss the entire asset class just because of a correction over the last few days. Now, with that said, I think gold structurally is still a mess. You're going to get your rallies and you're going to get your sell-offs, and between you, me, and the wall, we probably still have some more downside in this correction. If I had to guess, I would just stay away from it. It's sloppy. We had a nice move initially. Now we kind of just want to let it consolidate. In terms of, making investment decisions for bonds based on inflation and what gold is doing, in my opinion, I think you're trying to get too cute. I think I think maybe we should try to keep it a little bit more simple and not necessarily try to overthink things. And I think that the best game plan in general, but I think more specifically this year with what we're seeing, I think that the move is to trade what you see. It's not, so Treasury are doing this, so this currency should be doing that, and gold should be doing this, and since it doesn't match up, I don't know what to do.
Yeah.
I think we should just trade what we're seeing.
Yeah, you end up with analysis paralysis. Another thing that we mentioned is silver's just been a dog, and that just did not participate in the rally at all, and just kind of going nowhere. So do you trade the silver market?
Yeah, I mean, I wouldn't necessarily say silver didn't go anywhere. I mean, we did get a 12-13% move, something like that, with the S&P 500 flat, and then we corrected. To your point, silver did underperform and kind of has been underperforming, which for the precious metal space, if you really think that these guys are going to rally, you kind of want to see silver outperforming gold, right? You really want to see the higher beta, sort of more volatile of the two metals outperforming to the downside, to the upside, and we didn't see that. So to your point, that is maybe another reason why I would suggest kind of just staying away and being more of a spectator than a participant in that space.
Going back to your whole asset class and the shift of asset discussion, the momos are starting to lose a little bit of momentum, and we noticed over the last couple weeks that something like Berkshire Hathaway, which represents all the value stocks and everything. I mean, this thing has just broke out and exploded to the upside. You think that this is more of a trend to come for this year? If you're kind of going to have a quiet market, that people are going to be shifting out of the Momo stocks and into the more conservative, maybe higher yielding dividend stocks?
So far, that's what we're seeing. I mean, look at utilities, healthcare. I mean, these are some of the strongest sectors that we're seeing so far this year. And a lot of that has to do with, in my opinion, rates. The fact that rates have been coming down, you got people who need yield, and they're flowing money at a faster rate into higher yielding securities. So that's one thing. In terms of the Berkshire, I don't know that this particular rally is so much because people are coming into the safe haven. That might be the reason. I don't know. Between you and me, I don't know how safe Berkshire Hathaway is. I mean, it trades for the most part with the S&P 500. When in 2008, when the market crashed, Berkshire did even worse than the S&P. So I wouldn't necessarily call it a safe haven per se, but I will say this: the consolidation that we saw in Berkshire in the second half of last year and the breakout that we just saw is very, very impressive.
Okay.
On its own right. Why it did it, I have no idea. I don't really care. But that, I mean, when you see a big 6-month, 7-month base like that, and you get a breakout, I mean, that's powerful stuff.
Are you looking? I mean, you're looking at things. I know you love the charts, all about charts and trends, and with your blog and stuff. But you got to look at. Do you look at the fundamentals as well? Veconomics is pointing out here that credit in China is signaling trouble. Do you look at things on a global macro basis like that, or is that just too
I
much?
definitely look at things on a global macro basis. I don't really worry about the economy. Economic data is very backward looking, so I really don't have any interest in that. Plus, it gets revised like 18 times, so what are we going to do with that? As far as the fundamentals are concerned, I'm in the camp that all of this fundamental information and conversations that people have about, what a company's doing and their growth rate and all that stuff, the fact that we're talking about it, it's already priced into the market. These aren't secrets. So I just worry about the market behavior and, how things are moving. In terms of China, I can't speak in behalf of the economy. Quite frankly, I can't even trust what they're saying anyway, so it's another reason why I ignore that stuff. But just yesterday, we hit 8.5-year lows in China relative to the S&P 500, 8.5-year lows. So when I look at, the global macro environment and I see, okay, so equities is the worst asset class in the world this year. We came into the year bearish. It's not necessarily a place that I want to be, trying to get long on dips or something like that. I'd rather be fading strength. Within the equity space, China is one of the worst in the world, right? So after peaking in 2011, emerging markets rolled over, and now they're essentially at fresh lows since those 2011 highs. We're seeing levels in these emerging markets that we haven't seen since summer of 2009. Meanwhile, you have the United States and Europe making multi-year highs. So if you want to be short equities, I think that emerging markets, the underperformance that we're seeing there, we can continue to fade that strength. I mean, new lows, Russia, and people blame this Ukraine stuff and what we're seeing in Russia and the economic data. Russia's been underperforming for almost a decade, and we're hitting 5-year lows in Russia, and I promise you, it has nothing to do with these guys
What's going
invading
on?
Ukraine and all this other nonsense. We've been seeing this well before Putin, woke up on the wrong side of the bed or whatever.
Right. All right. Well, let's talk. Strategy. Just going back, to yesterday. Are you kind of like during a Fed meeting, Fed announcement, something like that? Are you kind of like, do you have your positions? Are you kind of hands off on the keyboard? Are you looking to react to what happens to cover a position? How do you approach situations like that?
Yeah, well, I don't try to make, huge bets and try to guess, what the Fed's going to do or not do or say or not say or whatever it is. I mean, that doesn't make any sense to me. But, when we're in asset classes and different stocks, we have our levels, whether there's a Fed meeting or not.
Good. Okay.
And we honor our levels, and if we get stopped out, we get stopped out. That's part of the game. It's part of the deal. It's what we signed up for, in this marketplace being wrong all the time. The idea is to limit that risk as best you can, and that's really the holy grail, is really managing risk accordingly. So on a day like yesterday, once you get the initial, knee-jerk reactions and you bounce around, and we got plenty of that yesterday, normally I like to see as the time zones start opening up, right? You got Asia opening up and then Europe opening up and then us finally. By the time we reopen up the next day, in this case this morning, all of the global marketplace has really had an opportunity to digest all of that. So the whipsawing around is essentially over, in my opinion, and the end result is that S&P futures are down. So that's interesting. All the emerging markets are down. Treasuries are flat. I think that something very interesting that we should be watching, and you talk about yesterday, is the euro. So if you look at a longer-term chart of the euro, we've been making higher lows since the peak in 2008. And if you draw a trend line straight from the peak in 2008, we ran right into that over the last week, and we failed miserably yesterday, and we're selling off. And, the market has memory here, and there's overhead supply, and I think that the euro is probably still a fade. You could use Euro USD, you can use 139, let's call it 66, which is the highs from the 13th of March. You could use that as your stop. We take that out, we'll probably be off to the races. But from what I could see, it looks like the euro's headed a lot lower.
Okay. Moving on to some specific stocks that you're looking at today, potential setups both on the long and short side. When I was just talking before we got on the air, you mentioned BlackBerry here, and just could you walk us through your thoughts on this stock?
This is a stock that I came into the year as one of my favorite names. I figured it would double pretty quickly. We got that. When we broke below the 2012 lows and then quickly recovered, and we got that false breakdown. To me, that's the most beautiful thing ever. I mean, that was in December when you make a new low. Everybody hates it. We know BlackBerry's in trouble. I mean, talk about the fundamentals of a company, right? This is another reason why I ignore all that garbage. I mean, think about it. You compare BlackBerry to Apple. BlackBerry lost $4 billion last quarter. Apple made $12 billion last quarter. Apple's flat for the year. BlackBerry's up 60%. So one has nothing to do with the other, in my opinion. I think it's more important to analyze the behavior of the market. You saw an epic short squeeze from BlackBerry off of the lows. We doubled. I think we double again. From a tactical perspective, you could use $9 as a stop. We break below that, then things probably start getting a little bit more messy. We probably have a little bit more consolidation taking place, but I definitely think
A
that we're
double?
probably
You
heading
think
up
this
to 18.
really? You think this thing's going to $18, and that's just regardless of the thesis, your overall thesis on the market? You just think people are going to pile into this dog?
Well, BlackBerry has nothing to do with the market. So BlackBerry is its own animal. In fact, I mean, if you really
Yeah,
want to
you're
get
right.
into it, it actually has a negative correlation to S&P.
Okay.
It has a negative 0.75 correlation over the last year. So to your point, yes, I like it, especially because I think the market goes lower.
What's your time frame on that for the $18 level?
Now, right now, this is happening. I mean, we got an epic
Okay.
short squeeze.
Okay.
Stock doubled, and we've consolidated now for how long? We've been consolidating for 2 months. Yeah, I think that's enough time. Yeah. I
All
think
right.
we're off to the races, 100%.
So you're leaning on the $9 level there. Okay.
That's been support for the last couple
Yeah,
of
I
months.
mean,
So
you
if
don't
we
have
break
to.
that, I mean, we got to
Yeah.
respect that level.
Yep. I mean, you don't have to be, Bill O'Neill to, pick that out as $9 is a great support level. So, okay.
Yeah.
And also, you got a retracement from, off the $11 level. You went down to 9. I mean, this could easily be at $10 in a couple days. So, okay. Is there anything else that you like on the long side?
The USD CAD, in other words, shorting Canadian dollars. I mean, this has just been one of my favorite names for months and months and months. And me, I love big round bottoms, big bases, and breakouts out of those bases. And that's exactly what we got in the USD CAD. I mean, look at a weekly chart of this thing. Just a big, huge, round bottom, beautiful base.
Is there
I
an
mean,
ETF? Is there because I'm looking at my future symbols here, and I'm a little bit.
FXC.
Okay, yeah, give me a second.
Frank X-Ray Charlie. I mean, look at this thing crashing. It looks like emerging markets. Actually, it looks exactly like emerging markets. Isn't that beautiful? Yeah, I mean, it looks exactly like emerging markets, but worse, if that's even possible. So I love it. I mean, I think it's beautiful. We got a nice breakout. We got a nice consolidation, a nice, beautiful, symmetrical triangle. We got a breakout over the last couple of days. I mean, I think this has 116 written all over it. I've been saying that since the beginning, and everything that I've been seeing just continues to confirm that. It looks like we're headed higher.
Okay, any stocks that you're turning a little bearish on?
The regional banks. I keep fighting it, and I would say half the time we probably get stopped out. The other half the time we probably do well. It's just something that really, really bothers me. Financials have been underperformers since last July. I mean, on a relative basis, when you see financials peaking, I mean, July was how long ago? We're going on like 10 months ago that financials have been underperforming. So that's number one. Number two, we had a nice reversal yesterday. A lot of people got excited about this bank breakout. Then we rolled over, went out near lows. Pre-market, how are we looking pre-market? Not really much action pre-market, not really much going on there. But, if you want to get aggressive, what other thing that I don't like? I don't like that momentum on the sell-off in January. We hit some
That's
oversold
financials.
conditions. Oversold conditions are a bear market characteristic. When stocks are in bull trends, they don't get oversold. They stay in overbought conditions and remain out of those oversold readings, and we got oversold readings. We had a nice fade yesterday after the initial rally. From a tactical perspective, you could use yesterday's highs as your stop and really short the hell out of this thing. I think KRE.
KRE is what you're looking at. Okay.
Yeah, the regional banks.
Yeah.
Yeah, you could probably fade these aggressively because from a risk reward perspective, I mean, what's the risk? I mean, you have very, very little risk, and if you're right, it's going to be a home run. I mean, think about it. You can make 10% on this very, very quickly, and what's your risk? You're looking at what was the highs yesterday? A little over 42.
Right.
You got 40 cents of risk, and maybe 10-15% to the downside at least.
All right.
And you have momentum rolling over on weekly time frames. Scary up here.
What we were talked a little bit earlier about the social media stocks, and Twitter just seems to be dead money here. Yeah, you traded that at all? You gonna try and buy it at the $50 level, or is the run over and you're just leaving this dog alone?
Yeah, I mean, full disclosure, we have some for investors, pre-IPO that becomes liquid in May. So I do have, I do have exposure through there. Tactically, would I be entering right here? I really don't see, an entry point. I mean, if you really want to push it, I suppose, you could use this $50 level as support and kind of stay long above that, just because it's proven to be support in the past. So if you really want to push it, go for it. I'm more inclined to maybe trade off of a key reversal day, right? So if we see something like what we saw in regional banks yesterday where they rallied initially and then faded, and that gives us a nice entry and a nice risk reward, and we know we're wrong if we make new highs. If we could see something like that in Twitter, I would feel much more comfortable, from a tactical perspective for sure.
Yeah, we were talking about that too. Maybe a washout through that $50 level, maybe taking down 49.30, 49.40, and then come back up through that level. Just a quick question. You said you had some of the stock from the pre-IPO on that. I mean, is that totally restricted stock? I mean, can you sell calls against it at all, or you can't do any? You can't buy puts.
It's in a limited partnership.
Oh, so you can't even buy puts about it, huh? Okay, all right.
I mean, we can we do anything we want in the market. One has nothing to do with the other.
Okay.
Yeah, we could buy calls, we could buy stock, we could buy options, we could do anything we want. Yeah, one has nothing to do with the other.
Okay, and the biotech. I mean, that's had a great run. Are there any stocks in that sector that you like to follow?
It's another scary one. I don't like it. On the new highs that we saw in February, momentum started rolling over. We had a reversal. I was out on the stream on StockTwits and Twitter 2 weeks ago, pretty much near the highs saying, all you guys, the biotech guys, and I have a lot of friends that have been making a killing in this. So, I'm not just hating. I just think at this point, I'm not a hater. I mean, I want everybody to make money. I just know that's impossible. I think that, things have gotten stretched, very, very stretched, and I'm seeing momentum rolling over on multiple time frames. To be initiating positions here, when you're at historic levels relative to longer term moving average, I mean, you're at some historic extremes. So to be initiating positions in biotech here, to me, from a risk reward standpoint, doesn't make any sense at all. Especially because I'm bearish equities. I would absolutely not be chasing these guys. I would be fading it too.
Right.
Especially if biotechs, if XBI, for example, starts breaking 156, I think you could probably get another 35 points to the downside, something like that.
Okay, if anybody in the chat room has any questions on any individual issues or a take on the different sector, please join the discussion. We'd love to get your questions out to JC. Just to finish up here with a couple momentum stocks here. I see that well-defined support in the biotech. For you biotech traders out there, surely keep an eye on you had multiple lows in that area. And that stuff is also so headline driven too, with all the drug trials and everything. But that well-defined support level, we'll just close out.
But that's why I stay with the ETF, because it's not headline driven.
Exactly.
Because if you're going to be buying the individual biotechs, and you could wake up at 5 in the morning, 6 in the morning, and somebody died in a trial or something like that, or God forbid something bad happens, and things cut in half, and you're down 50% overnight, and there's nothing you could do about it. So for the most part, especially as a technician, I try to stay away from the individual biotech names for that reason alone. But the XBI isn't driven by headlines because it's very diversified. So I'd rather be in something like that for that specific reason.
Okay, how about the Momos here? How about Tesla? It had the big run up after earnings here. and now it's just holding the 230 level. What you just not enough bounce for you here? You think it's come down and fill that gap?
It probably will. I don't know. If you have to be long, which me personally, I'm not. I'm not going to be initiating a position right here. But if you have to be long, I would stay long above these recent
These
lows.
lows,
What is it, like
I agree.
228, something
Yep.
like that? You could probably use that as support. That breaks, you're probably going to see $200. I mean, if you really want to get down to details. For me, the upside potential based on the risk to me isn't worth it. But I think it's important to recognize that we all have different time frames. We all have different risk parameters. We all have different objectives when it comes to the marketplace. And this particular risk-reward setup doesn't meet my parameters. It doesn't necessarily mean that somebody else won't look at this chart and say, oh, wow, that stop at 228, with that risk, that's perfect for me. So go for it. But for me, it doesn't make sense.
Okay, NQ Mobile headline stock. I believe Muddy Waters really beat up on this thing. They took it down. It's battled all the way back. It's an ADR. A lot of headlines battled back. Are you? What's your interpretation here? It's battled almost all the way back from the Muddy Waters report and stuff. Slow rally back. You got any take on this one?
It looks like a mess to me. It really is. Like where are you wrong, right? So let's say I buy it right here at $20.31. Is it doing anything pre-market? It is not. So
18.
where are you wrong? Where are you wrong? You're going to take it all the way down to the 50-day moving average, and now that gives you 13% of risk. That's way too much for me. So if you enter right here, where's your stop? So that's the first thing that I have to ask myself, and I can't define that. I can't answer that question. So if I can't answer that question, and the kind of the weak answer that I can give is way too much risk for me, I wouldn't buy this thing. And what's the upside? Like, where am I going to be selling it? So anytime I look at a name, right, you ask me about NQ or Tesla, it doesn't even matter what the asset class is. Those are the first two questions I ask. How much risk is in there and how much reward? And in this case, it just looks like a hot mess. I don't know the risk and I don't know how much reward there is. So not for me.
Okay. And then also the KRE that you trade, do you just trade that outright? Are the options? Is there any liquidity in the options, or do you just not interested in the options market?
Again, I am. I am very much interested in the options market, but it really all depends on what your time frames are and what your goals are. So for someone like myself, I would prefer to trade the equities in this particular case. Somebody else might say, no way, the puts are so cheap or whatever it is. That might be best for them. So in terms of what vehicle to use to play this particular asset, it really depends on you and how much risk are you willing to take. What's your time frame? I mean, me personally, I'm trying to make money right now. So, if you're buying out of the money calls from, several months out or whatever it is, you're doing that because that is what your goal is in the marketplace. So I can't tell someone how to play a certain situation. I could just say, this is where I'm wrong, and this is our target. I mean, that's really all I can do.
Very consistent, JC. I appreciate the way you look at these charts and automatically identify the risk and the reward. That's what we try and emphasize on the show. Thank you for everybody out there listening to the Pre-Market Prep Show. We are live with JC Parets, and we'd love you to join the discussion and get in here. Enter our live chat, run underneath the show. We need people signing up because DJ comes up with good questions, Violin Maker, SFG Bright TG. You guys are great. We'd like everyone to join the chat and throw some questions our way. All right, JC, we're getting close to the open. We're going to let you fly here. Thank you so much for coming on, and we'd really like to have you back any time that you're available.
Yeah, you got it. Thanks for having me. Always a pleasure.
Okay.
Have a good one, guys.
All right. Now, the question is, am I going to be in trouble with Joe for keeping JC on too long? Well, should we take a poll on the desk?
Let's take a break so you and I can have a chat, Joel. No, I'm just kidding. Everything's cool, man. No problem. JC's a great guest. He's a good guy to have on. At All Star Charts is his Twitter handle, in case you aren't already in the room because of him. Check him out, and we will definitely have him back hopefully next month.
Do you notice what he says and what Fari says and just about any and Nick Shaheen and all these guests that we have on here? no matter what chart I bring up, no matter what I'm talking about, almost the first thing that they identify is the risk. Where is your risk in the trade? Where are you wrong? Where is your out? And it's really a consistent theme. And, JC, when we looked at that NQ chart, right away he looked, if I buy here, where am I getting out? He thinks about how much money he can lose. If he's right, then he'll take it on his profit. But, it's just a very consistent theme here. So do you want to, do you want to go into some headlines, or what do you want to do, Joe?
Well, I mean,
Headline.
headline. Yeah, I can
Two
read
headlines.
one if you like.
Okay, go ahead.
Let's see here. Let me find the most interesting one. Any suggestions, Shubs, for the most interesting headline of the day so far? The no Microsoft. An ex-Microsoft employee accused of leaking Windows 8 code to a tech blogger and bragging about breaking into the Redmond campus now faces federal criminal charges following allegations that he stole trade secrets. Arrested on Wednesday, software architect Alex Kibkalo, Kibkalo, is accused of stealing Microsoft trade secrets while working for the company. Investigators contend that Kibkalo was also caught bragging about leaking Windows 7 program files as well as an internal system meant to protect against software piracy. Having spent 7 years working for Microsoft, Kibkalo is alleged to have leaked Windows 8 code to a French technology blogger in mid-2012 prior to the software's release. Kibkalo was apparently angry over a poor performance review. Kibkalo also appears to not be very intelligent. I don't think that I would want to go up against Microsoft by revealing trade secrets.
No.
What else do we have here? The no longer anonymous author of a popular Wall Street Twitter account has found a new publisher 2 weeks after a Simon & Schuster imprint dropped his book amid allegations that he had misrepresented himself. Grove Atlantic announced Wednesday it had reached a six-figure deal with John Lefevre for the Wall Street takedown Straight to Hell. Lefevre had attracted hundreds of thousands of followers through his irreverent and anonymous at Goldman Sachs elevator at GS Elevator, which purported to offer an inside take on Goldman Sachs. But in recent weeks, his identity was revealed, and he acknowledged that he never worked at Goldman Sachs. Lefevre is a former Citigroup executive who lives in Texas. Grove Atlantic said in a statement Wednesday that it was comfortable with Lefevre's background. The book is scheduled to come out this November. That's going to wrap it up. Very short in headlines today. Just a reminder, ladies and gentlemen, that the show would not be possible without our friends at Options House. That'll give you 150 commission-free trades just for signing up for an account through this page. If you like our show, if you like our interviews, go ahead, open an Options House account, and get those 150 commission-free trades just because you listen to Benzinga's Pre-Market Prep. That's money in the bank, right, Brent?
It's money in the bank.
Money in the bank. So, that'll do it for me today. Who wants to take it?
I want to take it. The market wants to take it, though, because the market is open.
Yeah, it's popping back.
We are trading 1851 on the S&P futures. I see a couple touches at 1850 in the pre-market, Joel, and we couldn't break through that. And then at the open, we get about a point right at the open there.
Yeah, I just wanted to update our traders. Dennis had talked about a couple there were buying balances, and what's interesting is these buying balances kind of saved the market here a little bit. GE had that buying balance. If you were inclined to take the other side of that, the specialist or the designated market maker did open it up at the high of the day, 25.37. You would have had to been quick. You would have had been quick to get a dime out of it here, but that's what happened there. Another one with a buy imbalance was Pfizer, the pharmaceutical company. Let's just take a look what that buy imbalance did. Boom, boom, that opened out right at the high, 232.13, and that came in nicely. So if you were following those imbalances, that worked out well. Just go to the S&Ps here, Brent, and great volatility yesterday. We're traded down $1.50 here. Now, see if you're learning from this technical analysis that I've been teaching you.
Yes.
Okay. So the net change is down $1.50 here. What am I looking at? What's a key number for me on the upside in the S&P futures?
You're taking me into some kind of fair value here, aren't you?
Not so much fair value, but something that we talk about. You know, I love highs, lows, and
Okay, let me.
and when
see.
I
This
do
is a
my
good
numbers
test.
for you, when you ask me, on a what do I say? Well, that high's important, the low's important, but what else is important at the end of the day? The closing price, right?
Okay.
Closing price in the SPOOs was 52 and a quarter. We have hit 52 in the pre-market. Trying to get green here, trying to get green. So over the next, 5, 6, 7, 8 minutes early in the session here, if we can't get positive, if we can't turn this market here, then we may get, a little bit more of a sell-off. We had Fari looking for that 42 low to take it out. But the first significant level is the close, and another buck up from that, you have the pre-market high. So trading at some resistance. Did we have any kind of upgrades after we did the show, or?
Yeah, there was a few that we didn't. I mean, we didn't really talk about any rating changes this morning, did we? It was a very busy show today.
Yeah, I mean, we hit out of the park with Fari and JC. I mean, we had the most incredible. And
Absolutely.
Joe, I would like to thank you because Joe is primarily responsible for the guests and everything. And so, Joe, I'm gonna throw some kudos your way. Thanks a lot.
Much obliged, my man.
Great lineup today. I just threw something out in Nick in the chat room, kind enough to join us, and just talking to him on his long-term thing. And he just headlined reaction until the Fed changes tone and drop the "we got our back" sentiment. Can cautiously be optimistic. I mean, and I think what you're seeing in the market is, yeah, well, interest rates are going up, but how much are they going up and when they are going up? And see, the market seems to be poo-pooing that. So Nick popping in with some fundamental analysis here.
We got your back sentiment. That's been in place pretty much, I think, since the David Tepper call back in maybe 2009, the buy everything call. So it's been around for about that long, yeah.
Right. Well, an interesting way to look at things here. So what other stocks did we cover here in the pre-market here? We talked about the gold, and gold, right when we got on the show, that gold was at the 1321 level. We identified that as support, and it's rallied about $5 since then. Let's just take a look and see how the miners reacted to that. Let's first take a look at what were some of the ones we had some support levels in. We were looking at Newmont. That's kind of nowhere. Let's look at, let's take a look. I pulled up the wrong chart there. Looks for Newmont here, 24.26. That's just kind of hanging out, not really rallying or dumping. GG had that big level at 26. Couldn't quite get there, so it looks like the little bit of that rally into bullion pulled some of these stocks from opening near the support levels we had identified earlier in the show. So Jake is here in his Spartan t-shirt.
Indeed.
Very nice, and I'm here in my Michigan shirt. We're all ready for the games today.
Evan's got his Texas
Evan's
shirt
got his
on.
Texas on.
Brent's got his Broncos jersey
Oh, yeah,
on.
the Western Michigan Broncos. Do they play today, too?
Syracuse, yeah.
They
and
played
then
today?
Harvard plays Cincinnati.
Harvard. Oh,
so
that's
let's
right.
let's wait to see
Yeah,
if
we got.
Fernando comes in with his Harvard gear on.
Oh, yeah, we are well represented here.
Yeah.
Kyle doesn't have a team in. His Central Michigan team didn't make it in, but I guess Jason's gonna let us put all the TVs on the basketball game starting at noon.
We're gonna do all the screens as well. So
yeah.
no terminals. Let's just skip that. We'll switch to live coverage of all the basketball games. Throw out stats there, and looks like Michigan State's on a breakout here.
Yeah, we'll see. They were. You could have bought the calls on them a couple weeks ago, right?
Oh man, they were rock bottom. Those were great prices until they hit the tournament. Now those calls got to be way overpriced at the point with Obama picking them to win it and all the ESPN analysts.
And you know who else picked them to win it in the bracket?
Who?
Lisa.
Really?
Yep.
Oh,
Yep.
man.
Yep. She did her bracket last night. She has a Michigan State Arizona final.
That's who I have too, actually.
Yeah. So we'll see what happens. All right. So what stocks are we looking at?
Well, I think we're going to do two sector plays to start with. First off will be 3D printing. I know you guys were going over this earlier. The X1 had earnings after the close yesterday. The earnings were pretty weak, but I think what's hitting the street more is the weak guidance. We've seen over and over again from 3D Systems, from Stratasys, and now from the X1, weak guidance coming in this quarter for the coming year as a whole. Now, we all know how, pumped up these 3D printing names have been in the past, let's say 6 months, maybe even a year, but with this guidance, it's really just kind of dragging them down. So, we had weakness in 3D Systems, Stratasys, and the X1 all this morning. I didn't see VoxelJet moving down, but I'm guessing that they're moving as well. When I looked, which was admittedly about half an hour ago, they hadn't traded yet, so would keep an eye on them as well. They trade a lot more thinly, but they trade more in more volatile fashion. So, Joe, what do you think thinking of some of these names?
Traded down. I mean, you're fighting the tape here, by buying these things. Obviously, some good shorts or opportunities to cover shorts here. In XO1, we got down to 38 as the pre-market low. We've only hit 38.50 in the session. 37.80 has been the low of the move. So, you've gotten a bounce off the 38.50 level, a quick buck away from there. So, I think you may be drifting higher in that one. Let's see what Triple D went, because we were talking about that $60 level. Dennis, that's his initials if you guys didn't know that, Triple D. He got a shot to buy it there on the way down, though. Opened up kind of high, came down to 59.74, but got a bounce here, so we'll see if that level holds up. And then there was also a level in SSYS, Stratasys. I think that's twice in a row. I got that right here. That one, it's just kind of holding up. Got nowhere near the 110 levels. So the longer they don't come down and push back through those lows, they got a chance to rally. But, you come out with bad earnings and bad guidance. Is there any reason to, they're like telling you not to buy the stock.
I mean, what do you expect? And it's not like it was just bad guidance on the X1. We had bad guidance on 3D Systems and on Stratasys as well. I'm not necessarily saying it's like doom and gloom for the sector as a whole, but maybe they're saying, all right, let's temper this rally a little bit. Let's calm down, guys. Like, I don't know. Maybe that's what they're trying to say, or I don't know.
And I'm going to try and dig it up, because I did an article on this, and it was not one of my better ones, but I was trying to just bring in the analyst ratings and stuff.
Yeah.
And I just remember right at the end of the year, I mean, the analysts were just pouring into these 3D stocks. Remember? It's like you got to own them, and that's when this stock was at like 90. And we always make fun of the analysts and fading them and stuff like that. But the whole street was just hopping on these things and vavoom. So
that's when you know it's a lot of times it's too late in a stock, which is what worries me about the Spartans, because all the analysts are hopping aboard there, and I really hope that doesn't mean we're at the top yet.
Well, it's the fundamentals, though. It's the fundamentals.
Right, yeah.
I'm looking at the fundamentals. So.
I sure hope it's a fundamental call. So another sector I want to look at is the coal sector this morning. Bank of America came out with a report on Arch Coal and Walter Energy. Arch Coal's ACI, Alpha Charlie India, and Walter Energy is Whiskey Lima Tango. Dropped the price target on both of those. Basically, the most important comment in that whole report is they just think that the met coal prices are going to be weak for years to come. I don't know if you could get a worse headline for the coal sector as a whole. They were dropping this morning. Walter Energy also did price a large offering of senior notes after the close yesterday, which may be contributing to its drop. But Walter Energy was getting hammered this morning. It was down over 12% the last time I looked. That was a little while ago. But look at that chart. It's from basically November 1st there. It's been a rough ride for Walter Energy. So, Joel, what do you think?
That's always a headline stock too, isn't it? It's like
it
seems like when I started working with you boys, like take out, take down, fake out, a lot of things like that. I mean, I don't know a lot about I could tell you this chart just doesn't look good, but what do you use coal for?
You still have a majority of coal-fired power plants in the United States. We're not building any new nuclear power plants. When was the last one built? It was in the 70s, right? We can't get them approved. And then other than that, obviously there's solar power, but it's nowhere near what the coal power output is right now. So as you get more weight on the power grid from, let's say, electrics and hybrids, that power grid has to produce more. So I think a lot of people, or at least some contrarians, are saying, okay, I'm going to get into coal because we're going to become more reliant on coal, and it's also an abundant resource in the United States, so it's a way for us to be energy independent. On the other hand, it has the connotation that it's a dirty energy source. A lot of pollution from it, and it's messy and all that.
Yeah, if you look at, I look at it from if the more that we go into, the solar and stuff, the less I look at coal. But just quick to update on the S&Ps. We did try to get green, Brent. Did you notice that? Was that you buying it at 1850, 250? We got green by 2 ticks. That didn't last very long at all. We are now in the red by $1.50. So the settlement is holding up as a good number. So in what we covered, Walter, we covered Arch Coal. Anything else? We got a few minutes left here.
Yeah, looking at some of the other names out there. We got the fuel cell names moving down. We did have some movement in ING. Their ING US, which is Voya, is their ticker, because I remember how they're changing their name. It's Victor Oscar Yankee Alpha. They're doing it's kind of a complicated move. So ING Group, which owns ING USA right now, is doing a 33.8 million share offering out into the market, of which ING USA, which is Voya, will buy 7 million of the shares. The rest are going to go to the public market. The pricing, though, it seems to be impressing the street, and allow basically the vote of confidence to let it float on its own seems to be kind of buoying the share. So it was getting a little bit of a boost this morning on that. So that was some weird secondary action just based on basically a complicated deal here, but they're up about 2.5% on the news. So
did you get Kolb's take on this? Isn't he a big?
Should yeah.
Yeah,
I mean,
maybe we'll get to
he was with
Kolbster.
ING
Would
for,
love to
like,
come
10
on
years,
here,
yeah.
but he never gets in that early, so we'll have to take a look at that. Dennis is pointing out some strength here in some of the financials, and we talked a little bit about Citigroup yesterday, and they'd been hanging out in the low 48s, and it had a nice breakout yesterday. I just want to alert our traders that Citigroup is approaching the high from yesterday. Yesterday's high, 49.52. We're up at 49.49.
Alrighty, well, I mean, we're at 94 or 9:45, so it's been a solid show. But Joel, I think we should probably make sure we close everything out and hop on to the morning meeting.
Yeah, we just got to pump all our news out, so so we can focus on the basketball games.
Well, yeah, the true news of today.
Yeah,
Right, yeah.
Don't forget to let everyone know that they can stay in the chat room, all day if they want and talk among themselves. And we can even have a basketball chat this afternoon.
Hey, I'll hang out.
All right, thank you for listening to the pre-market show, and please join our discussion in the chat room. We'd love to have your input. That's our show for today, and we will be back with you tomorrow.